Ladies and gentlemen, welcome back. My name is Patrick L. Young. This is the IPO video in Patrick's opinion, ably added to by Toby. There are many different maxims in financial markets. There are also many different ways in which financial markets work that can seem bamboozling to the uninitiated eye at first. One of those is the fact that financial markets are always, supposedly anyway, looking forward. They're always not just concerned with what happens on a particular day, they're wondering what's going to be happening in a week, or a quarter, or a year, or even longer. In that sense, the way that markets look forward can lead to interesting pricing disparities. Also, markets love the idea of trying to what they call price in something that's going to happen. Thus, we have a huge industry of analysts, observers, number crunchers, statisticians of all forms, shapes, sizes and kinds, including presumably pug statisticians as well, who just cannot be licked. The statisticians, the pointy-headed mathematicians of the world, they get together, they assemble and they make estimates. There are all sorts of things that people estimate in financial markets. In fact, they estimate just about everything there is going. There are even people who make estimates of estimates. This is called the consensus number. Therefore, before any economic announcement, you'll often find that all the different analysts have their own predefined variable that they believe is going to be that particular amount. And some bright spark came along many years ago and he added them all together, averaged them out and came up with the consensus, i.e. what the crowd thought was the appropriate number. The crowd, of course, here in keeping with that great James Sorowiecki book, The Wisdom of Crowds. What does this mean? Well, it can be encapsulated in 4 simple words. You'll hear them often around the financial market investment landscape. Buy rumours, sell facts. In other words, people, when they're building a scenario in the short term within markets during the course of a week, will get themselves worked up into a particular position. GDP will be wonderful, GDP will be terrible, GDP will be somewhere in the middle. And they adjust their positions accordingly. Thus, if they think that the numbers are going to be good, they will buy in advance of the announcement of the number. But often what you'll find is, and this is the counterintuitive bit to the idle onlooker, at the point when the number comes out, as the number happens to be exactly what lots of people buying thought it was going to be, the market will often start to sell off. Why is that? Buy rumours, sell facts. So when you deal with this sort of little forward discounting conundrum, think about it often in financial markets. That's why when we actually have the hard news of a situation emerge, you'll often see the market doing the opposite to what we might readily expect. These are, of course, short-term considerations. For those of you who are very long-term investors, it shouldn't matter a jot to what you're doing. But at the same time, it's important to understand because markets are never linear. They do not just simply go straight up or straight down. They oscillate. They go up a bit, down a bit, down a bit, up a bit, all over the place. Quite a lot of the time, they're not even actually trending. 60 to 80% of the time, they may actually be going more or less nowhere, just marking time, sort of sitting there idly pondering the world going by and wandering around effectively in circles. Only relatively short periods of time do markets actually fundamentally trend. And that's why you get a lot of these noises, a lot of buying rumours, a lot of selling facts, and all sorts of other things which come together to build the big picture of markets. If you're a long-term investor, you're obviously interested in the big picture and you won't be concerned about buying rumours and selling facts. If you're a trader in the shorter term, buying rumours, selling facts, and making sure you're not on the wrong side of that process can ultimately be the difference between making a living or not making a return in any way, shape or form. So, there are 4 simple words to think about today. Buy rumours, sell facts. Ladies and gentlemen, my name is Patrick L. Young. I present the In Patrick's Opinion IPO-VID series, ably abetted by my dear, sweet, trusty derivatives trading pug, Toby.